welcome to the podcast today. Yes, we have the CEO of Lansdowne Property Group in again today to put some words of wisdom out there. And what we're talking about today is your mortgage. Do you have the right one? Have you applied for the right one? And some of the common mistakes we see every weekend from people looking for homes. Welcome to the podcast again, Rach. How are you?
Thank you. Thank you for having me on my podcast.
Any day, any day. First thing is I'm going to broach is a lot of people make the mistake of applying for a mortgage through the bank they have their bank account with, just for the sake of that's where I've always been. Huge mistake. As a buyer's agent, we tell everyone and suggest strongly to go and see a mortgage broker, because that is the only way you're going to ensure you're going to get the best deal. You still might get your mortgage through the bank that you do your banking with. But these days, times have changed, Rach. And we were just talking, I'll let Rach tell you a story about what it was like when she first joined the bank. We won't say how many years ago, but it was a long time.
Yeah, so I have to preface it by saying we both have banking backgrounds. I joined ANZ Bank back in 1988, the bicentenary year, when I first moved to Sydney. And we're just discussing the fact that when we did lending, and even when I joined the bank in 88, there were only like 4 types of loans. There was a commercial if you're in business.
Yes.
There was an owner-occupied loan, a home loan we called it back then, an investment loan if you had an investment property, and you were able to actually, and personal loans, which was, if you wanted to buy a car, you never borrowed money off your house to buy a car or to go on a holiday.
No.
You got a personal loan. We were also regimented or probably programmed to go, we're going to do a personal loan. We're not going to borrow off our home loan, which was a cheaper rate. And then there was no, now you can do lots of things with your home loan. Like, you can do, 70% fixed, 30% variable. That was unheard of in those days. So, and people were locked into their bank.
They were.
If you banked with the ANZ Bank from when you were a child, or the Commonwealth Bank, you naturally went to that bank to get your first loan. It was just ingrained. You never shopped around.
No.
But now with and mortgage brokers have been around for a long, long time now. Thanks to John Simons, who started Aussie Home Loans, who really kicked that market off here in Australia. Thanks to him, we've actually, a lot more educated when it comes to not just relying on our bank, but shopping around.
Yes.
But I still think people still fall into the trap that even when they get their home loan, they seem to forget.
Oh, well, we're going to get to that later in the podcast. But one of the things people don't realise is that if they just go to their bank, they're told they can borrow $200,000. But when you go to a mortgage broker, you might be able to borrow $300,000 or $250,000.
I think we need to double it now these days.
Yeah, but I'm just probably triple it in many cases. But what I'm trying to say is every bank had their own servicing rates.
Yes.
And people think the big 4, or there's really the 5, because they've all sort of own each other a lot these days. And when you talk to a mortgage broker, they'll tell you now there's probably only 40% of mortgages going out to the big 4. There are so many other smaller non-bank and bank lenders out there giving fantastic rates, great serviceability. You don't have to have your bank account with the people you're getting your loan through.
Exactly.
And people don't know that, do they?
And that's another thing. When you are looking for a mortgage broker, look for a broker who's got lots of lenders on their aggregate. Don't go with just 10. Majority of mortgage brokers will have up to 20 to 40 lenders that they can actually look at for your particular circumstances.
Yeah, that is so true. And people have also forgotten when we were both in the bank, there was one loan. There was an investment loan, there was a housing loan. Now you can get a loan that suits your circumstance. So if you're someone in the armed forces, if you are self-employed, if you are the executive, or if you are in a non-for-profit, if you're just a normal person trying to loan, there are different products that are 100% suited to what you do, because not every product suits your circumstance, does it?
Exactly, yeah.
And the only way you're going to find these is to go to a mortgage broker. Now, I met with a mortgage broker in the inner city, and this lady specialises in people who are in the armed forces or in the police or any of those like government roles, because they have a very different way of getting paid. And the banks, not all the banks sort of look after them.
Well, they don't understand it.
They don't understand it, and they're transient, so they can get transferred anywhere in the country.
Yeah.
And so she specialises in looking after people because she knows their pension, she knows how they get paid, she knows their allowances. And not all mortgage brokers can do that.
She specialises.
She specialises.
Yeah.
And we've got others that do self-managed supers, don't we?
Yes, absolutely. And that's, we're not here to endorse any mortgage broker. Obviously, we have a panel that we do work with and we trust, and they're across the board. Like, our broker who is from the inner city, who specialises in Defence Force personnel and police force personnel. She's very specialised in that field. So you are actually, if you are in those fields and you want someone to review your home loan or have to have a look at it or your investment, then drop us a line and we can actually connect you with her. She is brilliant at what she does.
Yeah, there's a couple of things. We've also got a client that he was going through a divorce and his finances were a mess. Like a lot of people when they go through a breakup, it's not easy. Now we put him to a mortgage broker who knew how to restructure his finances, give him a budget plan, and he worked with him for 3 or 4 months. So, because he knew once he got to then, he was in the best position to borrow the right amount for the right property. And we all worked together. We found him a great property. His mortgage broker got him the right facility. They cleaned up his financial situation and put him in the best position to be able to get the most money that suited where he was coming from. Now, a good mortgage broker will do that with you. They work with you, don't they, Rach? And
Yeah,
they
they
look
do.
at the tax side, don't they?
Yes, absolutely. Yeah. But you need to shop around. Like you
You
just
do.
And I think when we were starting out looking and buying property, we naturally just went to our bank.
Yes.
Even though we work for 2 completely different banks,
Yes.
we went to, the bank, because there were no mortgage brokers
That's
back in those
true, yeah.
days, and we're talking a long time ago.
Yeah.
So, and things have changed. So I just encourage everybody not just to go to your bank. Actually, you can't even go to your bank now. You can't even walk into a bank. So
Well, they don't want to talk to you anymore, do they?
no, they're shutting down branches left, right, and centre. They're just some of them have taken their anyway. Don't get me started on the bank.
But a mortgage broker wants your business, don't they?
Absolutely.
Now,
Absolutely.
another question people come to us all the time. They ask us about finance. Do I have to pay a mortgage broker?
No,
How come?
because they're paid by the lender.
So they're paid a commission by the lender.
That's right, and a trail. That's correct.
And under the ASIC review, it doesn't matter. It doesn't come into it how much they're paid. They have to base their recommendation on the loan that best suits them.
Absolutely. Like mortgage brokers are like anybody in that field. Like we are bound by our rules and regulations. There are, we have to be very upfront with our clients.
Yes.
Like we're, even though we're buyers agents, we are real estate agents, and we come under the real estate agent like regulations and laws.
Rating, yes.
The same as a mortgage broker. Like they have to do, go through their education, the CPD, continuous professional development every year, which is the same as what we have to do. So they're not just going to throw you into any old loan just because they think it might be earning more money. When you're a mortgage broker, you're working for yourself. It's your reputation, your brand.
Yes.
So there's a lot of really good mortgage brokers out there. We can recommend 5 or 6 that we would go to and recommend for our clients and for friends and family, and we'll look after them. Look, we don't get nothing from it. It's just we want people to go to good people.
Yes.
Yeah, it's part of the service that we do provide for our clients.
Now, if you're a first home buyer, and I see this every weekend, and it frustrates the real estate agents, and it frustrates me in a different way. But people go and they have a look at a house and they love it. And the real estate agent rightly says, have you got your finance approved? No. So, Rach, you've been a mortgage broker, you've worked in the bank. How important, especially for first home buyers or people who are downsizing, how important is it for them to have that conversation and have full pre-approval subject to valuation?
Well, you need to know you need to know what you can borrow. So that's your serviceability. What can you actually borrow? And when we're talking about what you can borrow, what can you comfortably borrow? What can you max yourself at and still sleep at night borrow? And a lot of people do that. But you need to, before you even look at a house, step in the front door, go to your mortgage broker, see what your serviceability is, what can you actually borrow, and then look in your range, look in your budget. Don't go looking at, say you can borrow $850,000, and realistically, out here where we live in the southwest of Sydney, yes, you can still get into the market.
Yes, you can.
You're not going to be able to buy a brand new home for that amount of money.
No.
But you can get into the market. There's no point going and having a look at a brand new 2-story house that's $300,000 over your limit if you can't afford to buy it. One, you're setting yourself up for disappointment and
Mm.
failure, and you're just going to waste the real estate agent's time because you can make an offer, but then you go back to your then you say, oh, I need to get a mortgage broker and get a loan approved. They're going, sorry, your serviceability's not there.
No, I mean, how many people, and I hear this from mortgage brokers all the time, young couples go and apply for a loan, and you've got to be so honest with them. You've got to tell them everything. And I can tell you firsthand, I've sat there and listened to it, and they've come back, and then the mortgage broker, we'll have a chat through the week, and they go, oh, I rang Joe and Sandy, and Sandy didn't tell Joe that she had a old credit card that she hadn't paid off, and now they can't borrow what they want, and they missed out in the house. Banks know everything. When they do their credit check, they find everything. So things like an old credit card, even if you don't use it, close it. An old loan facility, you paid it off, fantastic. Close it, because it comes up and it will reduce how much you can borrow.
Yeah. My one piece of advice to young people getting in the market, if you have a HECS debt, that is going to reduce your serviceability. It's going to reduce the amount you can borrow because it's a debt. It actually is a tangible debt, even though it's that money is there would have paid for your university degree, or you're still going through university, or whatever your circumstances are. If you have a HECS debt, it's exactly that. It is a debt, and it is taken into account when you go to borrow money.
And another thing people think is, okay, I can borrow 800,000, fantastic. That doesn't mean you can buy a house for 800,000, because you've got your deposit, 10, 20%, and then if it's your second home or third, you forgot stamp duty. You forgot the costs of your conveyancing and your legals and everything else. So all of a sudden, you might be knocking on the door of mum and dad or the wealthy Auntie Marge that you haven't spoken to in 10 years saying, you just spare $40,000.
We have an Auntie Marge?
No, I wish we did.
Oh, damn.
No, we don't. Been looking. I think we went on Ancestry.com to see if anyone famous was related to us, and we failed.
Anyway, we'll just keep working.
Another one that does come up a lot, and people don't realise this, and we have access to it, is no end debt finance when somebody is downsizing. And there's that juggle between finding a home and selling your home.
Actually, I don't think a lot of people realise that that's available, because if you were downsizing, you would have been like us when we first got our home loan a while ago, is that would not have been in the suite of loans.
No.
So you probably wouldn't even have heard of that term, which is really, really, if you are downsizing and you've got the brakes on because you don't want to have to borrow more money, or you don't have to do bridging finance, which is quite expensive to do that, then this is a possibility.
There are multiple opportunities now to be able to finance the purchase of your home while you're still selling, or vice versa. So that's where they can miss out on the home they want. Say you've come to us and you've got a beautiful home in Camden and you want to sell it and downsize and want to move to Kingscliff, or you want to move to...
Are you talking about us?
Yeah, I'd love to. Somewhere like that, and you know that you can sell here and have money in the bank and buy. You go up the weekend, you find the most magnificent house in Casuarina, or it could be in Brunswick Heads, it could be Port Macquarie. There's one problem. No, we're not going to Port Macquarie.
We love Port Macquarie, mind you.
Yeah. But how can I buy it? Because they haven't sold their house. So you have to wait to sell your house, and then I can buy it. Then you ring the real estate, I'm sorry, it's sold. You got nowhere to live. So there are so many other options out there for people if you use a mortgage broker, because the banks don't offer it a lot.
No, they don't. Well, they don't want to offer a lot.
No, they don't.
And how many times does the bank ring you and say, you know what, you've had your home loan for 2 years, let's review it. Does your bank do that? Your mortgage broker will.
So you're saying that people, if they've got an existing mortgage, should do a health check on their mortgage every couple of years?
Absolutely. I'm not saying you have to refinance, but you actually should go through. It's like when you should review your health insurance, your house insurance, your car insurance every time it's due for renewal. Every time it's due for renewal.
Yes.
Don't set and forget, because there is. What's the Mad Meerkat ad?
Oh, yeah. Compare the market.
Compare the market. Yeah. So you compare everything. Don't let it go, because you know, it is competitive, and you should do the same with your home loan, even with your investment loan. And I'm not saying refinance. I'm not saying that, but actually check to make sure you actually have got the best deal, considering the interest rates don't look like they're going to be coming down.
Not at the moment. No.
Because again, the Reserve Bank have got no idea what they're doing. Says me. I'm not an economist, but
You're a realist.
But I'm a realist, and
You go shopping.
and they just don't have an eye. They, you know, they're punishing a small selection of the population because the rest can't stop spending.
I mean, let's be honest here. Well, very quickly, only 30% of the population have an owner-occupied mortgage.
That's right.
So the other 60% aren't getting punished. I mean, the renters are getting punished because the investors have got to pass on the increased interest when their lease comes up.
I think the rest of the population they're hurting because of the rise in, you know, electricity 100%. Rates, food's gone through the roof. But if you've got that plus an increase in your mortgage consistently, then you've got a double whammy. So I just think we've got really off track here talking about the Reserve Bank.
Yeah, but that's all part of having a mortgage. I mean, let's be honest. Tax advice is huge when it comes to an investment. Yes. If you go to the wrong bank, or if you go to the wrong mortgage broker, the loan that they set you up in can have either a really good effect on your tax or a very scary effect on your tax.
Particularly if you're looking at putting your purchasing a property within your self-managed super fund.
Yes.
You really need to make sure you have specialised advice. And that's not just through your mortgage broker. You actually go and see a financial planner or someone who's specialised in self-managed super funds. It's vital that you do that. With anything to do with your super, you really need to get independent advice.
So we're going to wrap it up here, and Rachel's far more experienced when it comes to the mortgage side and banking than I am, because I was a terrible teller and I got out of it all. What's 3 pearls of wisdom that you've learned over the years that you would give people when it comes to a mortgage and purchasing a house?
Before you even decide to look at a property, go and see a mortgage broker. See what your serviceability is. And what I mean by serviceability is that how much with your combined income or your individual income can you comfortably service? And the banks have limits or minimums actually on what they think you can with your lending requirements.
Yes.
So you must meet those. Check what your credit reference score is. That's really important.
And you can check that yourself.
You can check that yourself. If you have got like credit cards, even if you borrow money, you know, when you go to Harvey Norman or the retailers and they say, you know, you can pay it off in 18 months, that's a debt. That's credit. You've actually borrowed, even though it's interest free, that is a debt and that is counted. So all these little things that you might not think are counted to going towards decreasing your serviceability. Look at those. Get rid of your credit cards. You know, even if you just close them, pay them off.
Yes.
Don't have them. Go back to, if I haven't got the money, I don't need it. I think people really need to go back to that and stop borrowing on credit cards because the interest rates are out of control. They would have to be, 22-24% for a credit card? Madness. And Afterpay. Afterpay is, I'm not saying it's going to go towards your serviceability, but you can get trapped in the Afterpay. I'll just Afterpay it.
Yeah.
And I'll Afterpay it.
Now, that just reminded me, one quick last question before we do wrap up is auctions. We tell everyone to get pre-approval, but people don't realise it doesn't matter where you are in the country. Once that hammer falls, you're going to pay 10%.
Yes.
Can that be arranged through your broker?
Yes.
So all of that can be arranged through your broker.
Yeah, go and see your broker. If you're going to an auction, you must have your finance approved or pre-approved if you're going to auction. It's under 66W, which is the auction conditions when you are selling a property. It's as soon as you are the highest bidder and you are signing that contract, 10% down. And we'll talk about auctions another day because it's a completely different process when you're buying a house. Whereas when you're going to a normal sale, you can do the building and pest after. If you're going to an auction, it must be done before. Yeah,
so there's a lot of things. Now, so over the next couple of months, we're having different mortgage brokers who are specialised in different areas coming in, and we're going to talk about self-managed supers. We're going to talk about investments. We're going to talk about first home buyers and downsizing. So we're going to get experts in to talk and give you some hints and tips on where to do. But most importantly, we have a wide panel of lenders we work with. And brokers, yes, sorry, my mistake. And we match the broker to the person. So sometimes someone would like a broker if they're buying in Coogee. So we'll give them a Coogee broker, or someone that matches their demographic, where they come from, or what they're specialising in. And we'll just give you their names, and then it's up to you if you want to use them or not. But these are people that we trust, and they specialise in different areas, and they look after different clientele as we bring them in. Anything else you'd like to say before we wrap up on this beautiful weekend here?
So just wishing that was our view at the moment. We can walk out and see the water, but anyway. So yeah, have a great weekend, guys. If you've got any questions, you can contact us through our socials or our webpage, which is lansdownepropertygroup.com.au. We're on LinkedIn, Facebook, TikTok, and Instagram.
Yep.
Or you could call us directly. Our phone numbers are both on our webpage. Or you can just drop us a direct message through any of our socials. No question is too silly. You don't know what you don't know. And we're happy to reach out and have a chat and see what assistance that we can give you in your home buying process.
Well, thank you all. And as we say always, you have a groovy day.
Bye.